Yeah, so you asked how I've been. I've been good, just like absolutely swamped in work. I'm pretty happy for the for the week to be ending, not gonna lie. I think I need the weekend. You?
Yeah. Yeah, pretty good. Yeah, it's an extra long weekend over here. Kids have school off today. So nice little 4-day one. We're gonna go up to Whistler tomorrow for a couple nights. Stay at a friend's place. So should be nice.
Brilliant. My recovery from Money 2020 was a little bit difficult too. Like I flew the red eye on
I
Tuesday
know.
night.
Yeah.
Wednesday was tough. And it kind of rolled into the weekend, and then the weekend was tough. So,
Yeah, yeah. See, you should have listened. I got that extra morning on Wednesday. I packed it in early on Tuesday night. Just like nice little kind of rest in the morning. I think I had one call and then headed to the airport and I felt great. I mean, it's obviously a slog, but I mean, I don't know. I look back at that so fondly. Like, I mean, for us, like our first is Kinvey. I mean, that to me was just like exactly what I'd hoped.
the takeaway for me was optimism, right? Like there was a pretty big washout in the past couple of years across fintech and crypto. Like everybody figured out truly where they stand after like the crazy 2021, 2022 run up, and then all markets coming back to earth. It felt like that was behind us and everybody knew where the baseline was, and now we're building again towards a future where fintech is a much bigger part of the overall market for financial services globally.
I think so. I think there's a giant, reset of sorts. I think that when there is that uncertainty, I feel like, the show every year, there's like some themes, right? And I feel like when there is some uncertainty, almost what starts to happen is like there's like niche themes of the show in terms of what everybody's talking about. I think that when there's some stable ground, that you kind of come back to some of like the core concepts of fintech uh in terms of a theme. And like this year, I actually wouldn't say there was like some big overarching theme that took over the whole thing. But I mean, I would probably say like money movement and payments was kind of like it's almost like back to that. But in a lot of ways, again, to me, that is actually a signal of like stability because that's obviously about how do we enable like new innovation and new products and new growth at a kind of like a through a really broad lens. So, I don't know if there's a science there, but it's just intuitionally like what I picked up on was I think that same confidence and optimism that you do as well.
Yep, exactly. People are ready to do business, right? And the corollary to being on stable ground is that everybody from, at scale fintechs to the payments world to sponsor banks are all retreating to value, if you will, like very specific go-to-market strategies for very specific user segments with bank sponsors looking for at scale programs that they can invest deeply into instead of the sort of spray and pray approach that we saw over the last couple of years, relative to, the accessibility that BaaS providers were creating. That's all gone. Everybody's sort of retreating back to doing big deals with confidence. And I really like that.
Yeah, it definitely a scenario where it was all about, how do we partner? How do we make a deal? How do we build something new? And I would just say the last couple of years that, there's some of that conversation, but, huge, obviously focus on like, how do we make things more profitably? How do we do more with what we already have? And I just felt like people were really out there trying to learn about like new avenues and new product lenses to kind of like think about their business through. So it was really cool.
Nice. And speaking of, one of the things that you and I were chatting about earlier was just the idea of how you start new programs inside of existing fintech. Sorry. So, you want to bring a big new product to market that carries lots of risk and has, a timeline that is at least 6, 12, maybe even 18 months out. You had some pretty strong thoughts about how you organize those teams in order to take the first steps. Do you want to
Yeah,
address that here?
sure. I mean, it's not maybe that I guess I do have some pretty big thoughts about it, but I also have some, pretty big questions about it too, because it's a difficult topic that I think, finds its way into most organizations. And I think even like with some of our clients, we see this time and time again where you reach a point where you really want to launch a new product, but specifically, I'm talking about businesses that already have an existing product line. They already have a core business. They're generating revenue, probably even like profitable with that revenue, or like, on the path to profitability. And as those things start happening, it's actually where this conundrum becomes even larger. And really what it is, hey, we've got some like high confidence or conviction around a new product idea, level of kind of like being thought out. Maybe it's like medium. It could even be on the path to being high in terms of like, we know we want to build it. But then all of a sudden reality enters the picture. And it's typically the financial reality that drives this, which is, how do we allocate resources to this new product and when do we do? And so I think that there's one thing that I noticed time and time again that doesn't seem to work. And really what that is trying to utilize existing teams and squads, specifically product engineering, to like slot them in to get this new product off the ground. It might work like, in a really, really small startup where you're really just still exploring. But I think that if you've got a bit of scale, the opportunity cost is like such a risk because you've got this existing business that, especially in fintech, has a whole bunch of infrastructure that, I wish it was like stable, but the reality is that it always needs work and improvement. This could be risk stuff. It could be compliance. I know a vendor on money movement might need to get replaced. A contract comes to an end. And so what I feel like ends up happening is you look a quarter out or you look 2 quarters out, and the company looks at a team and says, that team is going to be available, like they're finishing up a project. They're going to be available for us to like swap them over onto this new product and help us get it to market. But inevitably that team is actually only available for like a moment in time. Right. And so like you see this big glaring gap and you're like, plug it. Let's use the team we have. They're experts in this topic. Like, let's make it happen. But typically what will happen is that moment in time is fleeting. And, the next moment in time where they have to get back on what they actually built and what's driving the current revenue and profitability of the business, it needs attention again. And then the company's left with another started and stopped product on something new that they still have conviction in, but then they start to question, well, was that going to work out? It's going to be tough to get resources back on it. And so, this scenario, I personally believe that you got to set yourself up to make a big bet. If you've got a belief in a new product, do everything you can with a small group of people who are experts in that field to run with that idea as far as you possibly can. And then you actually make a bet for or against that product. It might be actually that, after you've done that analysis, you're saying, you know what, drop it. Or it could be, no, we're going for it, but like be prepared to go for it, get the financial resources behind it, plan it out and fire on it, because that team that you have is unlikely to be available to not only see it through the launch, but see it into being what you desire it to be and to be like successful product that needs that care and feeding to grow over time. So yeah, those are my thoughts. I don't know what you're.
It almost sounds like what you're describing is like the first type 2 decision in the life cycle of a new business or new line of business, where effectively, Jeff Bezos describes these as type 1 and type 2 decisions. So a type 1 decision being something that is easy to reverse. And so you optimize for speed of decision making instead of accuracy of decision making because the risk is so low. The risk is actually greater if you drag your feet. But you get to a point where you've made a bunch of these type 1 decisions and you've reversed a bunch of them and you're starting to narrow the focus of the whole initiative to a point where you either need to say go or no go. And that's a type 2 decision. But you're making that type 2 decision slowly through the process of all of these other type 1 decisions you've already made. And I think that first type 2 decision, that first decision to allocate resources at, a higher scale, a higher cost, I think it's scarier than it needs to be. And what I mean by that is, to your point about standing up independent teams, independent pods or squads, and funding them and giving them a set of business goals, that team should be able to operate in a very compartmentalized way and should be very composable to the rest of the business. When we architect products in organizations, especially where there's multiple product lines, and the idea is to create cross-sell opportunities, we think about the technical architecture of the product as being sort of independent of all of the other pieces of that business that need to work well in order for that product to succeed, and in order for that product to in turn create big impact for the business. And so to the degree that you can make that type 2 decision to go and jump off, and then create a very clear sort of contractual relationship, if you will, much like an API is a contract, with the rest of the organization for who's going to be responsible for what and how we're going to make that interface really easy to work with, the interface being the team, and then ultimately the product itself. I think that's thinking about it that way is a way to reduce the perceived risk of that first big type 2 decision, which is to say, we have engineers on the project, we've committed to these vendors, we're gonna sign these vendor contracts, and so on.
Yeah. No, I'm in complete alignment with that. And I mean, the more we talk about it, but I don't want to get it misconstrued. I still feel like in that first kind of type 1, decision making process as you're leading up to the big one, you're testing things, you're prototyping it. You're going through kind of all of these strategies to build confidence in that type 2 decision. But I also think it's probably something good hygiene will be setting a timeline to get to that type 2 decision as well, and being super clear as you're approaching it, hey, I don't think we're there yet. We need more data, but I can just, I've been in scenarios where two things happen. You either do that type 2 too early, and that obviously can hurt you in the long run as well. Or you wait around, kind of waiting for those resource gaps to emerge. And as I said, they're never really there for that long. So, I think that this is something that I thought it was important to share, just because I know that how commonplace it is, especially, I mean, most organizations have 3 or 4 new product ideas that they're thinking about big picture. And, it's you have to be prepared to make a bet at some point and determine when you're going to make that bet.
Yeah, and as a product leader and an entrepreneur, my goal is to be as close to failure as possible. Meaning, I'm willing to take the risk of failure by making commitments and making ambitious commitments. And if I get 75% of the way there, that's likely a very good outcome. And the upside of that is setting ambitious targets allows you to go and achieve things that you otherwise would not have assumed you could achieve. But that needs to be backed up with some level of commitment of resources, both money and people, right? And so there's that sort of that we're talking about where you get to and everybody's trying to figure out how to create alignment around the level of commitment that we have to this new line of business, right?
Yeah.
And you almost only get one shot to do that, because you don't want to make the decision to go and then have to move the goalposts for what would feel like to everybody unnecessary reasons, you just didn't get ahead of the recruitment process for building that team, or you didn't have a good shared understanding of what the cost of standing up that business is going to be, because we're talking about spending millions of dollars in advance of getting a product in market and potentially spending millions of dollars over the course of, 2 or 3 years to get it to a place of any maturity whatsoever, such that you could look and say, okay, we have a very large business on our hands if we just continue to move in this direction. So it's, yeah, I've been thinking about this quite a bit lately myself in the client engagement that I'm deeply involved with.
Yeah, high stakes decisions for sure.
High stakes decisions. I like that. That's going to be the title of this one. High stakes
There
decisions.
you go. Love it.
Anything else? Anything else that we should chat about? There's been a couple of news items lately, but I don't know if they're worth discussing.
I mean, something interesting that I saw today, and I might have to look up the name, but we've got a bank aggregator of aggregators on our hand now. Not sure if you heard of these guys.
Is it Teller?
No, it Money Kit, who, listen, I'm not slogging on them. It could be that in certain markets, this is a very valuable tool. But yeah, essentially this new business in the bank aggregation space, which is super important to a lot of different, customer flows and enablements for various fintech products. Yeah, it's launched as aggregator for aggregators, so that they are connected in with all the aggregators. They call themselves a super aggregator. And I guess just with my current Canadian lens, like I couldn't help but like think about how important that was to the ecosystem. And I'm still looking for the important part. I think to me in the Canadian space, what's most important right now is really the relationship between aggregator and bank, and kind of just like the stability of the connections and the performant nature of the service and platform. And so in Canada, I can't help but think that this isn't necessarily a problem to be solved for us. But I think, maybe in other geographies, businesses and fintechs can leverage a super aggregator to choose like the best and most stable connections at an institution level or globally, where maybe there's a kind of like a way broader set of institutions that might not all be supported by one aggregator. This type of super aggregator could, plug you in with a variety of different vendors with one contract, which actually do see the appeal in certain scenarios. But yeah, just that floated across my desk today. And I'm just starting to think of what other worlds might we start to see, like a super aggregator, or like a super card processor, or like, a super KYC provider, identity verification provider, start to emerge. So, time will tell whether or not this is like a trend in the fintech space from a, software as a service perspective.
Yeah, it is interesting. I wonder about the practicality of it though, right? Like I look at a market like Canada, and Canada is well served by Plaid and Flinks, we'll say. There was even a story in the Logic the other day, which is, I think, probably just like a rehash of somebody at the Bank of Canada saying, we should think about outlawing screen scraping. And I had a couple people text me about that story when they saw it, and my response was, well, 75% or so of the bank connections in Canada, because our retail banking sector is so concentrated, are already going through an API or some other type of connection directly with those banks that does not require screen scraping. And then the impracticality of something like that comes from the fact that, a credit union is not going to have the capabilities to allow a third party to securely connect to their systems to perform the same function. And so anybody that's a customer of a credit union would, of course, get left behind. And all that to say, back to your point, in Canada, it really is about the aggregation of the data, because we don't have open banking systems in place right now, or processes for, user consent and the transfer of user data securely. But in other markets like the EU and the UK, where open banking is relatively mature, I'm not sure that the data aggregation matters nearly as much as the collections and disbursements capability of doing push payments on behalf of the user. And so being able to authenticate into your bank account is one component of it. of that broader solution. But the real solution is figuring out how to execute money movement, which these aggregators would have to figure out how to introduce in some way. And as soon as you're doing money movement, there's a whole nother set of considerations to make around regulatory compliance. So for me, in almost every case, I am keen to find a partner on the infrastructure side that can just abstract me from as much of the underlying concern as possible. And I feel like the best way to do that is find a partner that is as close to the metal as possible, not another layer of abstraction in between, the metal, that partner, now abstraction, and now me. I don't personally see how aggregation will work for the types of things that I see and think about. It may work very, very well for read-only use cases where you're just trying to pull down data into like an accounting system or something.
Mm-hmm.
But from a pure fintech perspective, where you're delivering financial services, I'm pretty bearish on that idea. But I have heard of MoneyKit for sure.
Yeah.
This is a pivot for them.
Is that?
Yeah, for sure. For sure. Cool. Well, I guess I'll see you next week.
Yeah. Have a great weekend.
Awesome.
Happy long weekend. And we'll chat next week.
Amazing.
Okay.
Enjoy.
See ya.